Hey guys, it's Dave with Moneyology here. Hope everyone is having a great weekend. Today is Saturday, November 2nd, 2019, and this is the monthly charts around the world edition. We're going to take a look at 10 of the best momentum charts right now from a monthly perspective and 10 of the worst momentum charts from the same perspective. And this is going through ETFs, about a list of about 300 ETFs that we've gone through. And this is what we found. So hopefully you gain from this what we do as well. So starting with Palladium. Palladium is just absolutely on fire. It's from its lows in 2016. It's um, one, two, basically it's gone up 300%. That's absolutely incredible, and it looks to be on the verge of another breakout here above that 170, 175 area or so. I think it's heading higher, and the reason being it's above that 69 level, and so long as it stays there, it's going to be making new highs consistently. Palladium is absolutely on fire. It's creating new highs on the MACDs, and that's precisely what you want to see in a bullish market. Here are the junior gold miners as represented by the GDXJ, and you see that despite the noise over the last couple of years, we haven't really done all that much after breaking out from the lows in 2016. So we've been consolidating here, but I think we're very very close to a trend change. Not necessarily trend change per se, but we're going to break out of this base very soon to the upside. And I say that because momentum is consolidating right now, right below this level here, the 61 level, which is where we broke down from last time around. But price is much lower today than last time around over here, breakdown. However, we're just about at those same levels. So momentum is higher today in this leg of the rally than in the first leg of the rally in 2016. So that's a very positive sign. There are a number of different signs, but bottom line is the MACDs have just started going up in the positive direction over the last couple of months, and I think that this last pullback and consolidation was very healthy and likely resolves itself to the upside, where the first move likely heads towards that 50 level to retest these highs back in 16, and then that's where things get really interesting because a breakout above 50 and this can skyrocket to at least 63, possibly as high as 92, and much higher thereafter. Okay, here's Russia. Uh, Look at this beautiful rounded bottom here, back all the way back since 2011. This has been just consolidating, and we finally broke out from a monthly perspective. Obviously, this move from 2016 to 2019 is nothing to cry about. I mean, it's an incredible move. But right now, we broke out of this neckline, and so this right now presents a great risk reward entry. So long as this stays above 37, I think this goes higher. We likely make a run towards that 49 level, and then from there it will be interesting to watch how things play out. But right now we're above that 69 level right here. We're above the previous high pullback highs back in 2018, where we pulled back a pretty considerable amount. So making new highs with positive divergence. MACDs are doing very well, and I think there's no reason why this chart goes lower anytime soon. Here are the gold miners, and just like with the juniors, we've got this double top scenario about around 31. So if you're a long-term investor and you want to ride consistently just long-term trends, wait until this breaks above 31. And when it does, or if it does, I think it will, but if it does, this is going to go from 31 to a high of 64 rather quickly thereafter. So we're very close to that. So if you've been buying here as we have, then it's been great. But I think that the big move happens once this particular range is broken, obviously to the upside or downside, and the upside looks far more likely at this juncture. Silver miners, and silver, unlike gold, is nowhere near its 2016 highs in terms of the miners. But if you draw this trend line, something like that, obviously that bullish descending triangle has broken to the upside, and now we're consolidating here for a break above that 32 and a half level. Once that breaks, I think you're going to see a massively bullish move and very fast move in silver back towards those highs in 2016. So silver is looking strong. MACDs are really strong right now. The volume is really picking up, as you see here. So, and we've consolidated successfully, back tested that 50 RSI level, and there's just a lot of pent up momentum, and I think it's getting ready to rock very soon. Greece. Greece is another area that, on the one hand, if you look at it from a long-term perspective, Greece as a country hasn't done much since middle of 2014. What if now is different? What if this ascending triangle right now looks like it's about to break to the upside? Once it breaks, that's going to be a quick move towards that 1150 area. Okay, but what happens afterward? If that breaks, I mean, Greece can double very, very quickly from there. So there's a lot of leverage in Greece because the country's very indebted. But if their economy starts turning around, if the global economy starts going into this uh, reflationary market, I think Greece can be one of the main beneficiaries, and you see that in the price action. Home construction, another area that's done incredibly well since we pointed that out back in late 2018. Now we're at a double top position. So are we going to break out here or are we going to pull back? I have a hunch we're going higher, but right now it needs to break above that 69 level, close the month at that juncture. It's going to find some resistance here with this double top, but once this, or if it breaks, then you're going to see renewed highs, and home construction is going to look really, really strong. Semiconductors also breaking out to new highs. You see the descending momentum trend line has been broken to the upside. So, despite this negative divergence from these highs over here to where we are right now, I think we are starting a new uptrend, and I think these highs or these levels will be broken to the upside. MACDs are making new highs right now, and there's no reason to suggest that this particular move is a bearish divergence at this point. Brazil small caps. This is a very interesting chart. This looks like it's setting up the stage for a break above that 26 level. Breaks above that, and this can double, or not double, but be up towards that 42 level sooner rather than later. Notice that this 61 level is kind of where we broke down right around here, and so that's going to be a level of resistance. It was here, it was here, and it was here. I think we're going to break it this time, and if it does, it's going to be a really fast move to the upside. Taiwan, another market breaking to new multi-year highs. We're talking, these are highest levels, probably all time, frankly. And we're breaking out, and this is a great risk reward entry around 38. And I think you're going to see a lot more upside over the next many years. Okay, so those are the top 10 charts. Here are the bottom 10. And even in the bottom charts, you can find opportunity, or you can at least identify potential trend changes. And I've covered oil and gas related ETFs over the last couple of months. I'm fairly confident that we're close to a trend change, but it hasn't happened yet. And for me, monthly charts are very important for this reason. It gives me perspective. This 31 level has served as support over here, and over here, and that's where we are right now. And but for me, I want to see confirmation. I'd much rather give up this 15-20% and see it break above $8 than try to bottom feed and see it break these lows. So for me, I'm looking for a breakout above $8 to get interested on this XES position. But I will point out there's a lot of positive divergence and there's a lot of support here. We're not making new lows in momentum despite massively lower lows in price. Here, the small cap energy sectors, similar type of thing. We're making new lows here, here, and here, and momentum is barely budging to the downside. Yes, we're below the 31 level, but we're also at those levels where we rallied here all the way to 22. So 100% rally happened at these prices in the past, and I think we're very close to making a rally once again. But again, for me to get interested, I want to see this break above that $8 level. Natural gas. You look at some of the daily and weekly charts. Natural gas is starting to perk up as well, and but this chart is deadly. I mean, it just looks very, very weak. However, it's starting to perk up. You see the volume starting to pick up over here. So again, I want to see this break above this 13 level before I get interested in natural gas. But if this can break above the 31 level, this can run really nicely very quickly. Oil services, same sort of story. Consolidating here above that 31 level, served as support before, and is doing so again with positive divergence. And if it can capture some momentum, break above 13, this can run really fast. Oil, gas exploration. This one's a little bit um, I think stronger than some of the other ones. So you've got a double bottom here at the 2021 level, but this time around you've got positive momentum. We're not at the same lows now that we were in 2016, which is good. And it just needs to find some legs. I would want to see a break above that 24 level before I'm excited to go long from a just like put all your chips in play perspective. And this is the level that I'm drawing in the sand. Here's Nigeria, a country that's very tied to the oil sector. Also, notice last time Nigeria really rallied from a low of, I'd say, about 13 to high of 24. So a really nice rally. When did that happen? Right over here. This was the level right here when we broke out from the momentum lows. That's 31. We're right at those levels right now. So what was previous resistance now serves as support. If this 12 level can hold, I think this is a great entry point for a renewed move to the upside. Chile. Now, Chile is also interesting. Here is the last time we really broke out of a neckline here around that 34 level. Now, this was that 38 level of RSI. We're right at that level again. So, if this level of 34 can hold, and signs are pointing that it very well may, then this could be a great risk reward entry point. Coal, similar type of story to Chile. You see, coal is consolidating around that 38 level. That's around the level where we had a breakdown over here, and we really broke out over here, past above this neckline. So this 38 level is very important, and that's where we're consolidating right now. If this can break above those 13, the 9 and 18-month EMAs around, I'd say, 12, then and this can really rock and roll at a minimum towards a retest of those 18 levels. But I think ultimately this can go much higher, all the way to 42, if indeed this sector shows that it's ready to break out. Saudi Arabia. Saudi Arabia is consolidating below the 50 level. So, you've got a uh, very well defined resistance point, and we're consolidating right under uh, declining moving averages. So obviously not so strong. I don't necessarily see a reason to be long this name versus a lot of the other opportunities. But if these levels can break to the upside, then maybe this is a shot or a chart, a company, or a country rather, to look into. And finally, the MLP Index. So this is interesting because it pays a really nice dividend. And so if you can capture both the dividend as well as a nice price up move, that's great. So this is a level, this 38 level, which has held the support four times before and was resistance here and here. And so this is a strong level of support. And I think that also means that it probably holds. We might see some percentage, small percentage lower, but this is a good risk reward entry. I think with a stop loss below 17, this can make a run all the way towards that 26 level, all the while paying that 6 to 8% dividend. So just keep an eye on the MLP sector, especially if you are a income investor, because there are some good opportunities, especially with the technical backdrop at this juncture. All right, guys, that's it for this video. Stay tuned for the weekend review coming up, and we'll take a look at the weekly charts in the market, and also stay tuned this week for the premium reviews. We're going to take a look at uranium. We're going to take a look at precious metals once again, likely copper, and we're going to dive into the lithium sector as well, which we think is really starting to perk up. So overall, very bullish, and commodities are going to be leading the way for the next 12 to 24 months based on these charts. All right, guys, have a great week. Great month of November, and we'll see you back next video and next month. Take care.